Stocks were down this morning, but they were very quiet. What do I mean by that? Well, it wasn't some sort of accelerated sell-off. As a matter of fact, as I speak to you right now, we've got the Dow down about 1/3%. It was down almost a full percent earlier this morning. The S&P was down 0.75%, only down about 0.2 right now. NASDAQ was down 0.5%, positive by 1/3% right now. The Russell still down about 0.4%. Yields are back up to where they were on Monday. On Monday, we saw from the 5-year to the 30-year, all yields across that particular part of the curve up over 3%. We're back in that position now after falling below yesterday. The 5 years at 302, the 10 years at 302, the 30 years at 316, 2 years still at 275. That's basically unchanged after a 2 basis point bump up from Monday to Tuesday. U.S. mortgage applications again fell over 6% now. So we're seeing some of the Fed activity start to have an effect on the housing market. Mortgage applications have now fallen about 3 consecutive readings that we've seen lately. European Union GDP was revised higher in this particular revision. It was a last quarter's number, third revision, and it was revised stronger, which is interesting because tomorrow we have an ECB meeting. Now, will the ECB actually take this revision specifically into consideration? Well, it's likely, given that they pivoted a while back to talk about inflation and the concerns they had with inflation, and that is obviously the economic region most affected by the war between Russia and Ukraine. So going into that ECB meeting tomorrow, you might see a little bit more strength in the euro, a little bit more hawkishness out of the ECB based off of that GDP revision. Now, looking ahead, round 2 of the Janet Yellen testimony is happening as I speak to you right now. I mentioned we've got that ECB rate decision tomorrow. We've also got the weekly U.S. jobless claims. It is Thursday. And then at night, we get Japanese PPI as we again wait for U.S. CPI, which will come out Friday morning.